Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about KODIAK Sciences Inc. Annual Report. KODIAK Sciences Inc. is a clinical-stage biopharmaceutical company that specializes in the research, development, and commercialization of therapeutics for retinal diseases. The company's lead product candidate, tarcocimab tetramer, KS-301, is an anti-VEGF antibody biopolymer that has completed Phase 3 clinical studies for treating high-prevalence retinal vascular diseases. In addition to KS-301, KODIAK Sciences Inc. has several other product candidates in various stages of development. These include KS-501, a bispecific antibody biopolymer conjugate targeting IL-6 and VEGF, which is currently in Phase 2/3 clinical studies for treating wet age-related macular degeneration, AMD. The company also has KS-101, KSI-501P, a bispecific protein targeting IL-6 and VEGF, which is being developed to treat patients with retinal fluid and inflammation. The services provided by KODIAK Sciences Inc. include the research, development, and commercialization of therapeutics for retinal diseases. The company's expertise lies in developing innovative treatments for high-prevalence retinal vascular diseases, including diabetic retinopathy, wet AMD, retinal vein occlusion, and diabetic macular edema. The list of businesses and services provided by KODIAK Sciences Inc. includes research and development of therapeutics for retinal diseases, commercialization of therapeutics for retinal diseases, development of anti-VEGF antibody biopolymers, KS-301, development of bispecific antibody biopolymer conjugates, KS-501, development of bispecific proteins targeting IL-6 and VEGF, KS-101 overall. KODIAK Sciences Inc. is a leading player in the development of innovative treatments for retinal diseases, with a strong pipeline of product candidates in various stages of development. KODIAK Sciences Inc. maintains a market capitalization of $2 billion, broadly in line with the industry peer group. KODIAK Sciences Inc. trades at a higher price-to-book ratio of 15.64 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 55% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes, such as buybacks or dividends, rather than operational deterioration. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline in a company's financial performance can be identified through various factors. On the positive side, regulatory approval for product candidates and successful commercialization of approved products are key drivers of revenue growth. Market acceptance of these products, favorable coverage and reimbursement status, and government health programs covering them also contribute to increased revenue. In addition, companies with established sales and marketing capabilities can effectively promote their products, leading to higher revenue. Favorable reimbursement rates from Medicare programs can also boost revenue. Conversely, the failure to obtain regulatory approval for product candidates or inability to successfully develop and commercialize them are significant drivers of revenue decline. Other external factors such as economic conditions, inflation rates, interest rates, government spending, and geopolitical conflicts can also impact a company's revenue growth or decline. These macroeconomic factors can create uncertainty and volatility in financial markets, affecting a company's ability to generate revenue. The net income of the company has experienced a decline in recent years. This decrease can be attributed to various factors such as government enforcement actions and litigation, changes in U.S. healthcare reform, patent term restoration, and marketing exclusivity provisions under the FDCA. Additionally, reduced demand for products, decreased ability to set fair prices, and increased operational costs and compliance risks have also contributed to the decline. The company's profit margins have also seen a decrease due to increased operational costs and compliance risks related to government enforcement actions and litigation. Furthermore, aggregate reductions in Medicare payments have led to a decrease in profit margins. The company has not generated any revenue from product sales, resulting in non-existent or negative profit margins. Overall, the company's financial performance is consistently negative, with significant losses and low or non-existent profit margins. The company's financial performance reveals a concerning trend. Despite its efforts, the company has been unable to generate positive operating cash flow over the past 3 years. The data from page 88 clearly shows that net cash used in operating activities has consistently been negative for 2023, 2024, and 2025. This indicates that the company is using more cash than it generates from its operations, resulting in a net outflow of funds. The company's debt level has experienced some fluctuations over the years. Initially, there was a significant increase in debt by $100 million in February 2020. However, this trend was not consistent, as the total debt actually decreased from $194,150 in 2025 to $185,290 in 2024. This suggests that the company's debt level has been somewhat stable over the past year. In terms of interest expenses, there is a notable observation. Despite having significant debt levels, the company reported zero interest expenses for both 2025 and 2024. This indicates that the company may have secured favorable loan terms or has managed to avoid paying interest on its debts. The management of the company is expressing caution about its outlook due to ongoing operating losses and substantial doubt regarding its ability to continue as a going concern. Despite these challenges, the company remains committed to developing transformative therapeutics for retinal diseases through commercialization. To achieve this goal, it plans to raise additional capital through various means, including equity or debt financings, collaborations, or a combination of similar transactions. The company's strategy involves advancing its product pipeline, which includes several candidates in various stages of development. It intends to file a BLA in 2026 for 3 key indications and is building commercial-scale manufacturing capabilities. Additionally, the company is expanding its platform capabilities through the conjugation of small molecule drugs with its antibody biopolymer conjugate drug, ABCD, platform. Overall, while the company faces significant challenges, it remains focused on developing innovative treatments for retinal diseases and is taking steps to secure additional funding to support its growth. The company's acquisitions and divestitures are relatively minimal. There is no mention of any traditional acquisitions throughout the pages. However, there is a notable exception in the form of a sale of future royalties on page 92. This implies that the company has sold some future rights or royalties to Baker Bros Advisors, LP. In terms of divestitures, there are 2 key points worth noting. Firstly, the company sold the right to receive a capped 4.5% royalty on future net sales of tarcocimab to Baker Bros Advisors, LP. This sale represents a significant divestiture for the company. Secondly, the company canceled and returned 478,750 performance-based stock options, 2021 AUG PSO, to the plan on December 31, 2023. The company's financial activities over the past year have been notable for 2 key developments. Firstly, it has chosen not to pay dividends to its shareholders, indicating that the company is prioritizing reinvestment and growth over distributing profits to investors. Secondly, in December 2025, the company undertook a significant share buyback initiative by issuing 8 million shares of common stock through a public offering. This move suggests that the company is confident in its future prospects and is taking steps to reduce its outstanding share count while also providing liquidity to shareholders. There are valid concerns about inventory buildup or supply chain disruption in various aspects of manufacturing. The complex manufacturing process with high lead times, raw material shortages, and difficulty in procuring biologically derived substances, page 32, poses a significant risk to timely production. Furthermore, the competition for manufacturing resources from other products, page 33, potential delays in prefilled syringe development, changes in manufacturing methods or formulation of product candidates also contribute to these concerns. the inability to produce required volume in a timely manner, page 46, and third-party manufacturers' noncompliance with CGMP regulations exacerbate the issue. Additionally, supply chain disruptions are anticipated due to sole-sourced raw materials, page 57, current or future tariffs that may increase manufacturing costs and disrupt existing supply chains, page 59. Geopolitical conflicts and inflation rates are expected to have further global economic consequences, including disruptions of the global supply chain, pages 63-64. The ongoing nature of these issues is evident in the continued supply chain disruptions reported on page 79. These concerns highlight the need for careful planning and management to mitigate potential risks and ensure a stable supply chain. That concludes the financial summary for Kodiak Sciences Inc. Feel free to comment below, and I will be happy to answer them when possible.